All right, hello everybody, and thank you for joining us on a Thursday at 3 p.m. for what I promise you will be a riveting discussion about global regulation and cryptocurrencies, if the quality of the commentary in the speaker green room was anything to go by. I'm going to start with a very brief round of introductions just to sort of set the stage on the folks that you will hear from today, what their various interests of interest and in some cases disagreement might be. And at the end, we will have some time for questions. At that point, I will be that person who says, please actually ask a question and not merely make a comment on the state of the world. And I'll also ask you to stand up just so that our colleagues who are providing the live stream for this will be able to include you in those shots. I'm just going to start with the gentleman closest to me. Klaus Knott, you are here in two capacities, at least for this particular panel. You are the chair of the FSB, which has very important roles to play in the context of opining on financial stability and persuading people that this is an important thing for our overall financial ecosystem. And you are, of course, president of the Central Bank of the Netherlands. Thank you for joining us today. And immediately following, we have Commissioner Marie McGuinness, who is challenging portfolio, just I think in terms of scope, financial services, financial stability, and the capital markets. Thank you for joining us. Brad, you have perhaps the shortest title, Garlinghouse. You are the CEO of Ripple Labs. But you have, I think, one of the more complex interactions with some of the regulators that we will be discussing about today. So we will certainly be hearing from that. And last but not least, we have His Excellency Omer Sultan Al Ulama, who is representing the UAE. And again, very interesting portfolio that encompasses remote work, artificial intelligence, and digital assets, all of which are hot topics here in Davos. So thank you, everyone, for joining us. Now, if you have been to any of the other sessions recently, you may have heard any of the following words: Sam Bankman-Fried, Bitcoin, tokenization, digital assets, stablecoins, fraud, scams, hype, excessive exuberance, and regulation. And we will tackle, if I manage this time correctly, most, if not all, of those things. And I want to start by acknowledging that at the time of this panel, we are in an environment in which if folks have heard about crypto and crypto assets, and if they have an opinion on it, it tends to be one of two reasonably polarized things. Best idea of all time, worst thing ever. And the spectrum of opinions here on this stage is neither of those, right? What we are going to talk about is the messy and much more interesting middle, which is, given the existence of a set of underlying technologies known as the blockchain and the existence of an entire ecosystem from centralized exchanges to banks that work with those exchanges to companies dedicated to providing services in that universe, what is the appropriate role of regulation here? And Your Excellency, I'd like to start with you, because the UAE has, over the past several years, emerged as a jurisdiction with what is described as a lighter touch approach to digital asset regulation. Can you just give a sense of what that is and why?
Thank you, Stacey. It's an absolute pleasure being with all of you today. I was promised one Ripple to be on this panel. So
by Brad Garlinghouse, yes.
Share that. But in all honesty, I think the first and foremost thing that I want to describe is the UAE's let's say, journey with crypto started in 2015. We hosted the first roundtable where we just wanted to actually understand what this is and understand if it's worth regulating or not. At that point of time, let's say the adoption was quite low and people were still not sure what the utility was. So we thought, let's follow it, but let's not regulate it at this point of time. Today, our regulations are actually not lighter than most other jurisdictions. We have very extensive regulations, but maybe it's not promoted as you'd like on most platforms. Let's talk about, for example, VARA. We've heard that FTX is a license.
Can you say what VARA is?
So we have an authority in the UAE called the Virtual Assets Regulation Authority. And through that, people have heard that FTX and Binance and some of these other platforms were licensed. But the fact of the matter is we don't have a single licensed exchange in the UAE. What we have is a four-step process. The first is called a provisional MVP license for these exchanges to come and open up their activities for us to understand exactly what they are, if there's any fraudulent activity internally. Does this actually check out as a business? Is there anything that the government needs to really dig in to? And then they go through something called an operational MVP license, which goes and looks at their operations, goes and sees, for example, do they enforce KYC and AML measures?
Know your customer and anti-money laundering.
Yes, know your customer and anti-money laundering as well. And then finally, they're actually given something called a full market product, FMP, which allows them to bring in customers. So not a single exchange in the UAE was able to onboard any customers, even until last week.
Now, I would like for the European perspective here just for a second. That is by the kind of the framework of MICA, which is wending its way through the process. Seems still, even if it's not necessarily lighter touch, in a lot of ways much more focused on like exchanges in one particular part of the market. Commissioner McGuinness, can you just talk a little bit about what the markets and crypto assets regulation is trying to propose and how it may be similar to or different from the approach of other countries and states?
Well, we started work on this before my arrival into my role, so there was a concern that this existed. So in one sense, we had three options. Let it happen without, so turn a blind eye, ban it, or regulate. So at this stage, the market in crypto assets has gone through all the legislative process. It's not just implemented yet, but it is coming. And the idea is that a license is granted to these operators, which is across then the member states. They can operate across the member states. But really, in my view, regulation is about knowing what's happening out there, understanding that there can be checks and balances so that we don't just say we're regulating, we then actively do that. And I think the recent experience of those dramatic events in the whole crypto area has reassured us that we're doing the right thing and that I would like to implement soon, and we will. I think beyond that, it was interesting your observation about technology. So I want to be very clear that there is a difference between technology and how it is used. So we're also conscious that we don't want to stifle innovation. So we have already some pilot projects around DLT. But
distributed ledger technology. I'm just going to explain acronyms.
I have to say, you're passing all of the tests. So well done. So my apologies for that. I used to be like this. It gets to you after a while. So we have actually, you know, we're doing the right thing around trying not to stifle innovation, but not having, as we say, a Wild West. And again, I want to go back to the real world, which are the people out there, not in this room, who invested, like the youngsters on apps. We all have young people in our households. This is happening before we even knew it. Lots of people have suffered for what has happened now. So while the consequences may not be immediate for financial stability, for individual stability, both financial and mental health, this can be very dangerous. So the idea of something always going up, we know does not exist. But if nobody ever tells you that and you're quite young and you dabble a little and then you dabble more and then you borrow to dabble in all of this, that is a hugely damaging societal issue. So I think that in one sense where we are today, because of recent events, which we would all rather didn't happen, people will be more aware of the downside. And that's one of the upsides of recent events. And I think then beyond that, but it's probably too early to throw it in at this stage, is none of us really know where digitalization, tokenization will bring us. And we need to be mindful to do it a step-by-step basis and watch very carefully on each of those steps.
Chair Knut, in October 2018, you delivered a speech that was titled The Evolution of Power of the Blockchain, which is a very early period to be giving such a speech on. But one of the things that you identified in there was that a concern about the potential intersections between traditionally regulated financial institutions and crypto assets. And you even made the point that regulators don't like the phrase cryptocurrencies because crypto's not money. Can you talk about what the potential risks are? You know, we've heard about the need for consumer protection. We've heard about the importance of know your customer and anti-money laundering. We have had in the United States, for example, Silvergate Bank experience a multi-billion-dollar run on the bank, in part because of its exposure to FTX. It laid off 40% of its staff. It was able to tap a federally provided lending reserve that is only available to banks but not to crypto companies. You know, so even if we have CEOs like Jamie Dimon out there saying, I think his latest is, Bitcoin is hyped up fraud, there are other banking CEOs who are clearly interested in playing in this area.
Yeah, well, thank you very much also for having me. If I had been offered a Ripple, by the way, then I would probably have had to decline the invitation.
I think they mean XRP, not Ripple. Ripple's the company, XRP's the token.
Good.
Yes.
Anyway, but let me begin also by saying that the FSB also has a sort of single punchline for digital innovation, and that is trying to harness the benefits of innovation while mitigating the risks. I must say, though, that over the last year or so, we have been so busy with this latter part of this punchline, the risk mitigation part, that clearly there has been less attention on the tables that I join on harnessing the benefits part. But I guess that's also the role that you expect from a global community of regulators to play. Now, like Commissioner McGuinness, I would also say that many of the risks that we've seen in the last few months are not all that different from risks that we also saw elsewhere in the financial system in earlier episodes. They have a long history of the financial boom-bust cycles, etc. The difference this time is that they appear in a digital manifestation. But essentially, this is about liquidity mismatches, which makes some of these platforms vulnerable to runs. It is about creating expectations of ever-increasing prices, which are, of course, too good to be true. We know it. There are the dangers of leverage. People taking speculative bets. Well, you can't stop them from doing it, but speculative bets do turn into a financial stability risk if they're leveraged bets. So that's what you want to avoid as much as possible. And then, of course, there have been all these kinds of interconnections within the crypto space that have raised serious issues about governance, about conflicts of interest.
The rediscovery of counterparty risk.
The rediscovery of counterparty risk, etc. So our effort has been on the scale of banning, isolating/containing traditional incentives-based regulation to, of course, come up with a regime where all three elements need to be part of it when it comes to illicit activities, where unfortunately, too often, crypto assets do play an important role in the financing of money laundering, of drug trafficking, of illegal arms trading, etc. That is clearly areas where you find them where I think bans are appropriate. Isolating/containing, that is where you try to keep at least those parts of the traditional financial sector where leverage plays a huge role away from cryptos as far as possible to contain what I spoke about in 2018, the possible sort of contagion effects from the crypto world to the more traditionally regulated parts of the financial system. And then, yes, you have the normal incentive-based regulations, which are, again, not all that different. They are same activity, same risk, same regulation. Investor protection, transparency, separation of funds, all these kinds of things. And the business is global in nature. Many of these crypto assets are offered from places that I would call sunny places for shady people.
Can you give an example?
Well, I think we all know the kind of locations that we're talking about. So we need to have a global framework to regulate this. It doesn't make sense to just have national approaches. I think this is truly global in nature. And so we have been working concretely, and then I'll stop, on updating our regulations on global stablecoin arrangements and coming forward with a new set of recommendations for what we call unbacked crypto assets or other crypto assets. They are now in the open for consultation. So we are looking forward very much for sort of the responses.
It's the first pitch of the panel, people.
Yeah, and then we hope to finalize these two sets of recommendations by the summer of this year.
Now, Brad, you have already made the distinction between XRP, the token, and Ripple, the company. You are the only, you're a regulated entity, or you're speaking on behalf of a regulated entity. When folks talk about, these different sorts of provisions, you are the person or your various teams doing the paperwork, providing evidence of baseline trustworthiness. What is it like to be a non-bank financial services provider operating at the intersection of these very traditionally regulated financial institutions and less traditionally regulated, less traditional financial institutions?
It's exciting. I feel an obligation to advocate for. There are these new technologies that we can use for the betterment of economic value to our citizens, to our businesses, even to central banks. And I think to the extent we can focus on, hey, these are new technologies that can be used in that way. Like the earliest days of the internet, can these technologies be used in illicit ways? Yes, and certainly we saw the early days of the internet, and people called for bans of the
And to
internet.
be clear, the current days of the internet as well.
Oh, yeah, I guess, yeah. Well, although there was a much louder, higher decibel level call in maybe the 90s when people were, I think, more intimidated by how these technologies are being used. And I think we're seeing that play out in the world of blockchain as well. I thought it was interesting you described the UAE regulatory as light touch.
Said it was described as light touch.
Oh, described as light touch, all right. I actually give huge credit to the UAE.
Do you have a VARA license?
No, we do not. Although we might, I don't know the exact answer to that, but we do not currently. The point I would make, though, is...
You do not.
Thank you. The point I would make, though, is the UAE has done the work to codify what the regulations are. I think the challenge, and we discussed this before we got up here, I think the vast majority of players in the crypto space want to be good actors. But I think we have to be clear about what that means. And I think one of the challenges is, and I very much agreed with something the commissioner said, we talk about regulating crypto. I think we should, that's an abstract thing to say from my point of view. We need to regulate the activity. What is it that we're doing? So Ripple is in the business around cross-border payments. Our customers are banks. Our customers are regulated institutions. You can't have a non-KYC, know your customer transaction, et cetera. There are lots of regulations around payments, like know your customer, like AML, anti-money laundering, like OFAC compliance in the United States, et cetera, anti-terrorism finance. So I think when we say crypto's not regulated, I hear that and I think, I don't know what that means. Like Ripple's a very regulated company in lots of different jurisdictions, not yet in UAE perhaps. Although I don't know the exact status in UAE. The point, as much as anything, I think it's a misnomer to describe crypto as an unregulated business. In the US, you have in the SEC, someone at the chair saying it's the Wild West. Look, there are clearly examples where that's true, but there are a lot of people solving real problems for real customers and taking the air and the froth out of the hype and speculative bubble that really was true in crypto, I think is really healthy.
I think one of the challenges here is there are actually very few people describing crypto as an unregulated business. What they're saying is that it is insufficiently regulated and that there are certain types of activities, separate out the obvious and egregious fraud, scams, and grift, but there are certain types of activities that are either being presented to customers as potentially safer than they are, or the promise of guaranteed returns when there are no such thing. Or in the US, for instance, many investors in certain of these crypto companies, several of which have now gone bankrupt, were under the impression that their deposits were insured by the FDIC, which is that up to $250,000 of whatever the deposits were would be protected. And that was an impression that was in a lot of ways encouraged by the marketing and the advertising of certain types of these entities.
But we have laws about that, right? And now, well, frankly, I think instead of going after Kim Kardashian for promoting
That case was dismissed.
But I didn't actually know that. I think the things you're describing, and even we talked again backstage, like if there's fraud, we have laws about that in major jurisdictions.
But I think what I would love to get the perspective of the commissioner on is it is not always just explicitly fraud. Sometimes it's just misrepresentation. Or in fact, something I hear very often, which crypto folks like to say was like, well, do your own research. Like, it's a very easy thing to tell a venture capitalist with a team of people who are supposed to be good at this to do your own research. And it's a very different thing for a 17-year-old who's being advertised at on, Super Bowl advertising, for instance, to make informed decisions.
I think we need to step back a little, because if you look at the origins of crypto, whatever we call it, asset or liability, I think many would have set out on the basis that they did not want to be part of the establishment and therefore did not want to be part of the traditionally regulated sector. That feeling has not gone away, I think some do understand the need for regulation. So I think we're still in that battlefield of those who believe that crypto and everything around it is the future, and that, dare I say, central banking and monetary policy and all those things are the present, but not the future. And we have to have that public conversation. And we haven't had that. So we have in my view, there are two groups, really. There are those who still hold to this future that they can create, but haven't quite described what it will look like. And those who understand that you need to be part of the system, of the regulatory system. Now, you're right in saying that the activity of some of these should be impacted by other pieces of legislation. with crypto, because nobody can see it, it's kind of an invisible thing. It's just gone. It has, if you like, gotten away with more before regulation has actually been put in place. Because not all of crypto is bad, but certainly not all of it is good. Mm-hmm. And, you know, I think we also need to say, as we sometimes with the digital euro proposal, we need to be able to communicate what is the value of crypto today, where will it lead us tomorrow, and had we not put some regulation in place, how much worse could this be? Because there's a bigger, there's more of a societal issue around this as well. And I do listen a lot, I talk a lot too, but I try and listen. There are two different camps around the financial system. There are those of us who are older, not wiser, but older, and know a system. And there are those younger, tech-savvy, different outlooks on finance, different outlooks towards assets. And we need to make sure that there isn't a mismatch completely here. In one sense, we are, I suppose, the traditional regulators. I would like to think we regulate in a way to help those who see a vision for the future, but they haven't, in my view, articulated that vision beyond some believing, as the taxi driver told me his son had millions in Bitcoin.
Oh, the
there's
taxi
when I
driver
worry.
indicator.
So in one sense, we have to have the public discussion. The recent events have allowed this discussion to at least start, but it's maybe not always taking place in the forums that need to hear it. So I still think there are those who believe that crypto is the future and that it doesn't need regulation, and we have to fight against that, not because we want to trap them or restrict, but it is because when there is a problem, and I say when, who will be asked to tidy up if it's a big problem?